Okay, so you're psyched, ready to launch that amazing business idea, right?
Yeah.
Huge congrats. But
Yeah.
let's be real, where's the money going to come from? That's the big question, isn't it? And that's what we're diving into today.
That's right.
The wild world of business funding. How do businesses actually,
It's a question every entrepreneur faces. Yeah.
get the money? How do they get started?
Yeah, absolutely.
So even if you're not like launching a business tomorrow, right?
Right.
Just understanding this stuff can give you a whole new view of like
Yeah,
the whole business world, how things actually work.
absolutely.
Yeah.
It's not just for startups. It's
Yeah.
for understanding how companies grow and make those strategic decisions.
Exactly. So let's start basic.
Yeah.
What's the most like fundamental way to get a business funded?
Well, I mean, the most fundamental way is, fund it yourself.
Yourself?
Put your own skin in the game.
Yeah.
That's equity financing. And it's appealing because you retain full control. No need to answer to lenders, no need to share profits.
But you're the boss.
You are the boss.
Right. That's like the classic entrepreneur story, right?
Yeah, absolutely.
Bootstrapping it.
The classic bootstrap.
Yeah, like you were saying. I mean, the material mentions some great examples, right? Like,
Yeah,
people starting with savings and
Yeah.
then they reinvest that early revenue to grow.
absolutely. It's a testament to,
Dedication.
dedication, their belief in their vision. Right?
Yeah, totally.
But relying solely on personal funds, it can be limiting, especially when it comes to, scaling up those larger projects or if you need to expand quickly.
And it can be risky too, right?
Exactly.
Putting all your eggs in one basket.
Yeah.
I mean, the source material also talks about bringing in family and friends.
Ah, yes. The love money route.
Oh, I like that.
That's what it's often referred to. And it could be, it can be a great source of initial capital, especially for those who don't have access to the more traditional funding options. But,
Yeah.
you can imagine mixing business and personal relationships.
Uh-oh.
Can be tricky. There's a lot of potential for complications there.
For sure. Things could get awkward at Thanksgiving.
Absolutely.
If the business is not doing so hot,
Yeah.
the material also highlights, private investors, the so-called angel investors.
Right. Angel investor.
They bring not just the money, but also like,
Mentorship, expertise.
Yeah.
We've been there, done that.
yeah.
Their guidance can be as valuable as that financial contribution.
Oh, for sure.
But of course, big but, you're giving up a portion of your ownership.
Right, so it's a trade-off.
Absolutely.
Wisdom and funding in exchange for a slice of the pie.
Exactly.
Speaking of sharing ownership, what about selling shares? That's how companies go public, right?
Exactly. That's the IPO, the initial public offering.
The IP.
Right. The material even mentions, the incredible story of Netflix, how some of those early investors
Yeah.
turned, relatively small investment into a fortune.
Wow.
But of course, not every IPO is a guaranteed success.
No, of course not.
No.
It's a process, right? And
That's-
it's got risks.
It is. It is.
And for businesses that aren't ready for that IPO stage, there's crowdfunding.
Yeah, crowdfunding, it's really democratized access to capital,
Okay.
allowed businesses to raise smaller amounts from a much wider pool of individuals.
Yeah.
Like, Kickstarter, GoFundMe,
Yeah.
revolutionized
Sure.
how startups and small businesses get off the ground.
I mean, it's such an interesting model,
It is.
tapping into the power of the crowd.
Yeah.
But equity's not the only game in town, right?
Right.
Like, what if you need, more capital than you can personally raise,
Yeah.
or you just don't want to give up ownership?
Right. That's where debt financing comes into play. Debt, essentially, you're borrowing money from an external source with the agreement to repay it,
Okay.
plus interest over a certain period of time.
So it's like taking out a loan, basically.
It is. It is.
Does that mean you're kind of beholden to the lender's,
Like,
terms and conditions?
Absolutely. Debt financing can be a powerful tool for growth, but it comes with its own set of considerations. You need to have a solid plan for repayment
Yeah.
and be comfortable with those added financial obligations.
Right. So it's like a double-edged sword, right?
It is.
Leverage for growth, but also the pressure of repayment.
Yeah.
So what are the different, I don't know, what are the different flavors of debt financing?
Well, broadly speaking, we can categorize them into short-term and long-term,
Short-term and long-term.
each suited for, different business needs and time horizons.
Okay, let's start with the short-term.
Okay.
So the quick fixes. When you need cash now,
Right.
what are some common scenarios where a business might need a short-term solution?
Well, imagine a seasonal business, right?
Okay.
Facing a temporary dip in sales.
Yeah.
They might need a short-term loan just to kind of bridge that gap until the business picks up again.
Right.
Or, maybe a company facing unexpected expenses,
Yeah.
like equipment repairs or something.
Yeah, yeah.
They might need a short-term injection of cash to keep things running smoothly.
It's like a safety net.
It is.
Right. Like for those unexpected bumps.
Absolutely, yeah.
So what are like some specific types of short-term debt?
Well, I mean, there's the classic bank overdraft.
Okay.
Think of it as a line of credit that allows your business to dip into a negative balance
Uh-huh.
in its checking account, up to a predetermined limit.
The overdraft, a familiar friend to many of us.
Absolutely.
Even on a personal level, right?
Yes, yes.
But what if you need like a larger sum, than your overdraft allows?
Right. Then you might consider bank bills. Those are more formal agreements for larger loans with specific repayment terms. And those are often used to finance inventory purchases
Okay.
or to bridge a temporary cash flow gap.
Okay, so it's a step up
Yeah.
in terms of how much you can borrow.
Right.
The source material also mentions something called trade credit. What's that all about?
Trade credit is essentially an agreement between businesses
Okay.
where a supplier allows the buyer to purchase goods or services and pay for them at a later date.
Oh, okay.
It's a fantastic way to manage cash flow,
Okay.
especially in industries where payment terms are typically extended.
Yeah, so it's like a built-in financing.
It is.
Right, like within the supply chain.
Exactly, yeah.
But I imagine maintaining good relationships and like a good credit record
Oh, absolutely.
is crucial.
Crucial.
Right.
Yeah. Suppliers need to have confidence that they're going to be paid on time.
Trust.
Trust is paramount.
Totally. So we talked about the short-term side of things.
Right.
But what about those like big long-term investments?
Yeah.
The kind that shape a business's future for years to come.
That's where long-term debt financing really shines.
Okay.
We're talking substantial loans designed to fund major purchases, expansion projects, even acquisitions.
So this is like serious financial commitment.
Yeah, absolutely.
What are some of the like key players in this long-term debt arena?
Well, I mean, probably the most familiar is the traditional business loan.
Okay.
They come in all shapes and sizes, tailored to specific business purposes.
Yeah.
Repayment schedule.
Right. It's like a customized solution.
Yeah, it is.
Almost, right.
It is, yeah.
For your long-term financial needs.
Exactly. And within that world of loans, you have the option of secured or unsecured loans.
Okay. Secured versus unsecured.
Yeah, so secured loans typically offer lower interest rates
Okay.
because the borrower provides collateral, like property or equipment.
Right. So if you don't pay.
Right, that the lender can claim if the loan isn't repaid.
Got it.
Right, so there's that added element of risk mitigation.
Risk mitigation for the lender.
For the lender, exactly.
But what about unsecured?
Unsecured loans.
Are they like riskier for the borrower?
They can be. They don't require collateral,
Yeah.
which means the lender's taking on more risk.
Yeah.
And so to compensate for that risk, they typically come with higher interest rates.
Okay.
So
It's a balancing act.
it is.
Right.
Yeah.
You weigh those pros and cons
Absolutely.
based on, your risk tolerance, your financial situation.
Mm-hmm.
Now, the source material also mentions mortgages. Are those just for people buying homes?
Well, mortgages are, really, they're a cornerstone of real estate financing.
Okay.
Businesses use them extensively to purchase property,
Okay.
whether it's an office building, retail space, a manufacturing facility.
Right. So it's all about securing that physical foundation
It is.
for your operations.
Exactly.
Makes sense. Okay, wait. There's one more long-term debt option?
Oh, right.
Mhm.
Leasing? Leasing, yeah, that's a popular choice, especially for equipment that might become outdated quickly,
Right, right.
like computers or vehicles. So instead of buying outright, you're essentially renting the equipment for a certain period.
So you get to use the equipment, but you don't have that, like, huge upfront cost
Exactly. Mm-hmm.
of ownership.
Yeah,
That's pretty appealing.
it is appealing, but
But are there any downsides?
there can be. Interest charges on leases can be higher than other forms of borrowing.
Okay.
And you're locked into those regular lease payments
Yeah.
for the duration of that agreement, even if your business needs change.
Right. So you got to be,
Gotta think long term.
you got to think long-term
Yeah,
before you sign.
absolutely.
It seems like, wow, there are a lot of factors
There are.
to consider when choosing a source of finance.
That's a great observation. Every business is unique.
Yeah.
And the optimal funding strategy will depend on a multitude of factors: the industry, the stage of the business, the owner's risk tolerance, their financial goals.
It's like a puzzle,
It is, yeah.
figuring out which pieces fit.
Absolutely. And as we delve deeper into our exploration of business finance, we'll uncover even more insights into the strategic considerations that guide these crucial decisions.
Whoa, exciting.
Stay tuned.
I can't wait.
Yeah,
This is good stuff.
it is.
I'm learning a lot.
I'm glad to hear it.
Okay, so we've talked about the basics, right? Equity financing,
Right.
debt financing.
Yep.
But the story doesn't end there.
It doesn't.
The financial landscape, as they say, is always
Constantly evolving.
evolving. So
Yeah.
there are other factors,
Yeah.
right, that influence a business's funding decisions
Absolutely.
beyond just picking between equity and debt.
Right. It's not just what's happening within the company.
Yeah,
External forces play a role as well.
for sure.
Yeah, one crucial aspect is the overall economic climate.
Okay, the economic climate.
Yeah. Think of it as the backdrop against which every business operates.
Yeah.
So interest rates, inflation, economic growth,
Mm-hmm.
all of those things impact the cost and the availability of funding.
It's like the tide, right?
Yeah.
It can lift all boats or it can make sailing more challenging.
Very apt analogy.
Right.
Yeah, for example, in a booming economy with low interest rates, businesses might be more inclined to take on debt,
Right.
knowing that the cost of borrowing is relatively low. But during an economic downturn, lenders might tighten their purse strings,
Makes sense.
making it harder to secure those loans.
So you gotta be aware, right, of those external forces
Absolutely.
and how they might be impacting your plans.
Yeah.
Speaking of internal factors,
Right.
what about a business's own financial health?
Oh, that's crucial.
Right.
A business's financial track record is like its credit score.
Okay.
Lenders and investors want to see evidence of sound financial management.
Mm-hmm.
They're going to scrutinize things like creditworthiness, cash flow, profitability
Makes sense.
to assess the risk involved.
Yeah, so it's not just about having a great idea
No.
and a charismatic pitch.
No, not at all.
You got
Got to show them the numbers.
you got to show them the numbers.
You got to show them you can handle money.
Right, that you're responsible, that you can actually make a profit.
Absolutely. And a history of strong financial performance can open doors to those more favorable financing options, maybe lower interest rates, more flexible terms.
Right.
But on the other hand, if you have a history of financial struggles,
Uh-oh.
that could lead to higher interest rates or even difficulty securing funding at all.
Right, so it's all about building that financial reputation
It is, yeah.
that can either attract or repel
Absolutely.
potential lenders and investors.
Right.
Now, shifting gears a bit, the material also mentions government grants and subsidies.
Right. Government support.
What's the deal with those?
Well, it could be a game changer, particularly for, startups, small businesses,
Okay.
companies operating in specific industries
Okay.
that the government wants to encourage.
Okay.
Grants and subsidies are essentially financial assistance from the government
Okay.
to stimulate economic growth, promote innovation,
Mhm.
support specific social objectives.
So it's like a helping hand, right,
It is.
from the government
Yeah.
to foster certain types of businesses or
Yep, that align with those economic or social goals.
Right. Okay.
Absolutely. And, these programs can provide valuable funding, often with more favorable terms than traditional loans.
Right.
But they usually come with, specific requirements and eligibility criteria.
Of course.
So, you got to do your research.
Yeah, you got to do your research.
See if your business qualifies.
So it's like navigating a maze of opportunities.
You can be. It can be.
Right. You got to know where to look.
Yeah.
And what keys to use to unlock the treasure chest
Yeah.
of government funding.
Yeah.
Speaking of unlocking potential, let's talk venture capital.
Venture capital.
It sounds exciting
Exciting.
and a little
A
intimidating.
little bit.
What's the story with venture capital?
So venture capital is a type of investment typically provided by, specialized firms or wealthy individuals
Mhm.
that target high growth, high potential startups.
Okay.
And they're not afraid to take risks, betting on companies that could disrupt entire industries
Wow.
and generate massive returns.
So they're looking for the next, like Google or Amazon, right?
Yeah,
This
absolutely.
thing that could like revolutionize the way we live and work.
Exactly. And venture capitalists are often drawn to, innovative technologies, disruptive business models,
Mhm.
ambitious entrepreneurs who are willing to push
I
boundaries.
like that.
But it's important to note that venture capital is not for every business.
Right. Why is that? What makes a business like a good fit for venture capital?
Well, They're looking for companies with the potential to scale rapidly
Okay.
and achieve significant market share.
Okay.
They're not interested in funding, small lifestyle businesses.
Right.
They want to invest in companies that can become,
Huge.
billion-dollar behemoths. Yeah,
So it's high stakes, high reward.
absolutely.
And I imagine it's probably pretty demanding
Oh, absolutely.
for the business owners.
Venture capital comes with high expectations.
Yeah.
And there's a significant level of involvement from the investors.
Right. They're not just giving money.
No.
Oh.
No, they're not. They're offering their expertise, their guidance, their connections.
Right.
Think of it as a partnership,
Okay.
albeit one with a strong focus on, growth and achieving those really ambitious milestones.
So it's like you have this team
Yep.
of advisors and cheerleaders who are like super invested in your success.
Mhm.
That's pretty cool.
It is, yeah.
But the source material doesn't talk much about like business angels.
Right.
Are they part of the venture capital world?
They play a distinct but equally important role
Okay.
in the early stages
Okay.
of a business's life cycle.
Okay.
So think of business angels as those experienced individuals,
Yeah.
often successful entrepreneurs themselves,
Okay.
who invest their own money
Mm-hmm.
and their expertise
Yeah.
in promising startups.
So they're like mentors with money.
Absolutely.
Right. Providing not just that financial support, but also,
That guidance.
yeah, and connections.
In their own journeys.
From their own journeys.
Mhm.
Okay.
Yeah. So angel investors often fill a crucial gap, providing funding when those more traditional sources like banks might be hesitant
Right. Right.
to invest in a young, unproven business.
They're taking a chance.
They are. They are.
Right. On a company that might not have like a ton of history,
Right.
but,
But shows great potential.
but shows that potential. Yeah.
Yeah.
It's like those angels are giving wings to those fledgling businesses.
Beautiful image.
Right.
Yeah.
Helping them take those crucial first steps.
Exactly. And often, those angel investments can pave the way for future rounds of funding
Oh, okay.
from, venture capitalists as the business gains traction
Right.
and proves its potential.
Yeah.
It's a fascinating ecosystem.
It's so interconnected. This world of business finance.
Absolutely.
But it can also be overwhelming
It can be.
for entrepreneurs trying to figure it all out.
Yeah, it can definitely feel like a jungle out there.
Right.
Yeah.
Like, where do I even start?
Right. But remember, understanding the various sources,
Yeah.
the factors that influence them,
Mm-hmm.
the trade-offs involved, that's essential
Yeah.
for any business owner or entrepreneur.
It's like having a compass, right?
It is.
That guides you towards the best
Absolutely.
course of action
Yeah.
for your unique
Unique circumstances, yeah.
circumstances.
And as we continue our deep dive,
Yes.
we'll explore some practical tips and strategies for securing funding
Oh, good.
and managing your business finances effectively.
Okay.
Stay tuned.
I'm ready. Welcome back to our deep dive into business finance.
Glad to be back.
So far, we've kind of explored those fundamental options, right? Equity financing.
Right.
Tapping into your own funds, bringing in investors, debt financing, borrowing money, promising to repay it.
Yeah.
But
The story doesn't end there.
it doesn't end there, right?
The financial landscape
There's more.
is constantly evolving.
There's so many moving parts.
Absolutely.
So I guess there are other factors that influence these decisions
Absolutely.
beyond just like equity versus debt.
It's not just about, what's happening within the company.
Yeah,
External forces play a big role.
for sure.
One really crucial aspect is the overall economic climate.
The economic climate.
Think of it as the backdrop
Okay.
against which every business operates.
Right.
So interest rates, inflation, economic growth, all of these things
Wow.
impact the cost and availability of funding.
It's like the tide, right?
Yeah.
That can either, lift all boats
Right.
or make sailing more challenging.
Very apt analogy, yeah.
So like if you're in a booming economy,
Right.
low interest rates,
Yeah.
businesses are probably more likely
Yeah, more inclined to take on debt,
to take on debt.
Yeah.
Yeah.
knowing that the cost of borrowing is pretty low.
Makes sense. But then if there's an economic downturn,
Right. Lenders get a little more cautious.
yeah, they tighten up.
They tighten those purse strings.
So you really have to kind of be aware
You got to be aware. Yeah,
of those external forces
absolutely.
and how they might be impacting your plans.
Yeah, it's all about adapting.
Right. You got to be flexible.
You got to be flexible, yeah.
Speaking of internal factors,
Okay.
what about a business's own financial health?
Oh, that's crucial.
Does that play a role?
A business's financial track record is like its credit score.
I like that.
Lenders and investors, they want to see evidence of sound financial management.
Okay.
They'll look at creditworthiness, cash flow, profitability.
To assess the risk.
Exactly, to assess the risk.
Yeah, so it's not just about, having that great idea.
It's not just about the pitch.
The charismatic pitch.
No, you got to show them the numbers.
You got to back it up.
You got to back it up with solid financials.
Right, that you can manage money responsibly.
Absolutely. And a good track record, a strong financial history,
Yeah.
can really open doors to those more favorable financing options.
Right, you get better terms.
You get better terms, lower interest rates potentially.
Yeah, makes sense.
But if you've got a history of struggles,
Well, yeah,
that could lead to higher rates
not good.
or even difficulty securing funding at all.
So it's really about building that financial reputation.
It is. It's like building trust.
That can either,
Attract or repel.
attract or repel those investors.
Absolutely.
Now, shifting gears a bit,
Right.
the material also mentions government grants and subsidies.
Right. Government support.
What's the deal with those?
It can be a real game changer,
Okay.
especially for startups, small businesses, companies in specific industries that the government wants to encourage.
Okay, so the government's picking winners and losers a little bit.
Well, not necessarily winners and losers, but they definitely have priorities,
They have their priorities.
right? Industries they want to foster.
Yeah. Okay.
And so grants and subsidies.
Yeah.
That's essentially financial assistance from the government
Okay.
to stimulate economic growth, promote innovation,
Right. Yeah.
support certain social objectives.
So it's like a helping hand from the government, right?
It is.
To foster those types of businesses.
That align with their goals,
Oh,
yeah.
okay.
And these programs, they can provide valuable funding,
Okay.
often with more favorable terms than traditional loans,
Right.
but usually come with specific requirements,
Okay.
eligibility criteria.
I was going to say there's got to be a catch.
There's always a catch.
Right.
You got to do your research.
You got to do your research.
See if your business qualifies.
Make sure you tick all the boxes.
Tick all the boxes, yeah.
So it's like navigating a maze
It can be, yeah.
of opportunities, right?
It can be, yeah.
You got to know where to look.
You got to know where to look.
What keys to use to unlock that treasure chest
Exactly.
of government funding. Speaking of unlocking potential,
Okay, yeah.
let's talk venture capital.
Venture capital. The exciting world of venture capital.
It sounds exciting.
It is exciting.
And also a little intimidating.
A little bit, yeah.
What's the story with venture capital?
So venture capital is a type of investment
Okay.
typically provided by specialized firms
Okay.
or wealthy individuals
Okay.
who target these high-growth, high-potential startups.
Right. They're looking for the big winners.
They're looking for the big winners, and
Right.
they're not afraid to take risks.
Right.
They're betting on companies that could disrupt industries,
Oh, wow.
generate massive returns.
So they're looking for the next Google, the next Amazon.
Exactly. The companies that are going to revolutionize
Yeah.
the way we live and work.
So exciting.
And they're often drawn to innovative technologies, disruptive business models, ambitious entrepreneurs,
Right.
those who are really willing to push boundaries.
I like that, but you were saying venture capital isn't for every business.
Not for every business, no.
So what makes a business like a good fit?
Well, they're looking for companies with the potential to scale really rapidly
Okay.
and achieve significant market share.
Right.
They're not interested in funding, small lifestyle businesses.
So they want something that can be huge.
They want the companies that can become those billion-dollar behemoths.
Right. So it's high stakes, high reward.
Absolutely.
I imagine it's probably pretty demanding
It is demanding, yeah.
for the business owners.
Venture capital comes with high expectations
Right.
and a significant level of involvement from the investors.
They're not just passive.
No, they're not passive at all. They're offering their expertise, their guidance, their connections.
Right. It's like having a whole team.
It is. Think of it as a partnership
Okay.
with a very strong focus on growth
Okay.
and achieving ambitious milestones.
So it's like you have a team of advisors
Yeah.
and cheerleaders who
Fabulous.
are all super invested in your success.
Yeah, that's a good way to put it. That's pretty cool.
It is pretty cool, yeah.
But the source material doesn't talk much about, business angels.
Right.
Are they part of that venture capital world?
They play a distinct but equally important role,
Okay.
especially in those early stages
Yes.
of a business's life cycle.
Okay.
Think of business angels as those, experienced individuals,
Yeah.
often successful entrepreneurs themselves,
Okay.
who invest their own money and their expertise in promising startups.
So they're like mentors with money.
Yeah, they're mentors with money.
Right, not just the financial support.
Not just the financial support, but the guidance,
Yeah,
the connections
a connection.
from their own entrepreneurial journeys.
Right, because they've been there.
They've been there, done that.
They've done it.
So angel investors often fill a crucial gap,
Right.
Providing funding when those traditional sources like banks.
Right, the banks are like, too risky.
Risky, yeah.
We're not sure about this. They're hesitant to invest in a young, unproven business.
But the angels are like, I see potential.
I see potential.
I'm willing to take a chance.
Exactly.
That's really cool.
It is really cool.
It's like they're giving those fledgling businesses wings.
Beautiful image, yeah.
Right, to take those first crucial steps.
And often, those angel investments can pave the way
Okay.
for future rounds of funding from VCs.
As the business proves itself.
As the business gains traction, proves its potential.
Wow, it's really incredible how
Yeah.
interconnected.
It's an amazing ecosystem of financial support.
But I can imagine for entrepreneurs,
Yeah.
it can feel kind of overwhelming
It can be overwhelming, yeah.
to try to figure it all out.
Yeah, absolutely. It can definitely feel like a jungle out there.
Right. So much information, so many options.
So many options, yeah.
Where do I even begin?
Well, remember, understanding the various sources,
Yeah.
the factors that influence them, the trade-offs involved, that's essential
Right.
for any business owner, for any entrepreneur.
It's like having a compass
It is, yeah.
that guides you
Towards the best
towards the best course of action
for your unique circumstances.
for your unique circumstances.
Absolutely. And as we continue our deep dive, we're going to explore some practical tips and strategies
Ooh, practical tips. I like it.
for securing funding
Yes.
and managing your business finances effectively.
So important.
So important. Stay tuned.
I'm hooked. We're back for the final part of our deep dive into business finance. We've gone through, all the funding options from bootstrapping with your own money to, getting those big investments from VCs.
Yeah, we've covered a lot of ground.
But now let's get practical.
Okay, let's get practical.
What advice can we give our listeners
Yeah.
who are actually ready to take that leap
Right.
and secure funding for their business?
Right, because it's one thing to understand the concepts.
Yeah.
It's another to actually put them into practice.
Where do you even begin?
Well, it all starts with a solid business plan.
The business plan.
Yeah, think of it as your roadmap
Okay.
to success. The document that articulates your vision, your strategies, and really showcases the potential.
It's the entrepreneur's trusty sidekick.
It is. It is.
Right.
But what makes a business plan really stand out? Like, what are investors and lenders looking for?
Well, a winning business plan, it's more than just numbers and projections.
Yeah.
It needs to tell a story.
Okay, a story.
Yeah, that captures the reader's imagination, convinces them that your business is worth investing in.
So it's not just about, crunching the numbers.
It's not just about the number.
It's about the narrative.
It's about showcasing the passion, the innovation.
The why.
The why, exactly.
Okay.
So investors want to see, do you understand your target market?
Yeah.
What's your competitive advantage? Is there a realistic path to profitability?
Right. Okay.
And then, of course, the financials, those are crucial.
You got to have the numbers. Solid revenue forecasts, expense budgets, cash flow statements.
Yeah, it's all about backing it up.
Backing it up, yeah.
With, real financial planning.
Absolutely.
But with so many funding options out there,
Right.
How do you even know where to start?
Well, that's where research and due diligence come into play.
Okay, research and due diligence.
Yeah, take the time to understand the different options.
Yeah.
Weigh the pros and cons
Go.
based on your needs and your circumstances.
Right, because it's not one size fits all.
No, not at all.
Right, every business has to find that solution.
That aligns with their goals, their risk tolerance.
Okay, so consider those things like control.
Yeah, control, risk, cost,
and how much involvement.
Yeah, how much involvement are you comfortable with?
From those investors.
From investors, exactly. Think long-term.
Long-term implications.
Yeah.
It's a lot to juggle.
It is. It is.
Do you have any, tips to make it less daunting?
Well, don't be afraid to seek expert advice. Consult with financial advisors, mentors, experienced entrepreneurs.
Right, people who have been there, done that.
Yeah, and they've navigated those waters before.
They can share those insights.
Absolutely.
Help you avoid the common pitfalls.
Exactly, because, securing funding, that's just the beginning.
Right, it's just the first step.
Once you have that capital,
Yeah.
the real challenge is managing it wisely.
Right, it's not just about getting the money. It's about using it well.
Using it strategically.
Right. To achieve your goals.
Absolutely. So financial discipline is key.
Financial discipline. Okay.
Establish sound financial systems, track your expenses diligently, monitor your cash flow.
It's like having a financial dashboard,
Yeah.
right? To see how things are going.
Exactly. Real-time insights into your business's performance.
So you can adjust
Yeah, make those course corrections.
if you need to.
Absolutely. And as your business grows,
Yeah.
don't be afraid to revisit your funding strategy.
Okay.
Explore new options.
Got it.
Things change.
Right. What worked in the beginning.
Yeah, what worked in the early stages might not be the best approach as you scale up.
It's all about adapting.
It's all about adapting, evolving as your business journey unfolds.
Speaking of evolution,
Yeah,
we've covered a lot in this deep dive.
we have.
What are some key takeaways you want listeners to remember?
Well, firstly, remember that securing business finance is a journey,
Okay.
not a destination.
It's a marathon.
It is a marathon.
We're in a sprint.
It's an ongoing process.
Yeah.
Requires planning, strategic decision-making, and that willingness to adapt,
To be flexible.
to be flexible. Yeah.
Okay. That's number one.
Secondly, don't underestimate the power of a well-crafted business plan.
The business plan.
It's not just a formality.
right.
It's your opportunity to showcase your vision, demonstrate your understanding,
Of the market.
convince those investors or lenders that you're worth backing.
It's your chance to tell your story.
Tell your story.
And finally,
Never stop learning, never stop growing. The world of business finance.
Yeah.
It's complex.
yeah,
It's constantly changing, so stay curious. Seek out that knowledge, surround yourself with experts
it's great advice.
who can guide you along the way.
So as we wrap up, I want to thank you
It's been my pleasure.
for sharing your expertise with us.
Absolutely.
It's been a really incredible journey.
It has been.
And I hope our listeners feel empowered
I hope so too.
to tackle those business funding challenges with confidence.
Absolutely. Remember, every successful business started with an idea, a dream.
Yeah.
With the right funding and that determination, those dreams can become reality.
That's a great note to end on.
It is.
Thanks for joining us on this deep dive into the fascinating world of business finance.
My pleasure.